some would think that someone had planned this a long time ago.
Very much seems as though that's the case. Yeah.
So we are witnessing essentially the birth of a new world order.
So effectively, if the world population is 8 billion, that means every single person in this world right now owes $50,000.
Elon Musk is thinking about going out of space because there isn't enough energy in the US to run the AI boom. You can print dollars, but you can't print oil. All this petrodollar is being recycled to create this AI boom, and Iran destroyed those centers. You just touched something very interesting. These financial elites, they don't have a border. And what you have is a nation state everywhere else, but actually in the Western part of the world, if actually there is no nation state, it's just a bunch of wealth owners that traverse through the whole system. And you see that in the Epstein files. Welcome to Forecast Dialogues, part of the Forecast Economica think tank. Most people think they understand economy because they follow inflation, GDP, and other economic metrics. However, the real drivers are energy systems, monetary flows, and capital allocation. I'm Jilani Gulam, economist, investor, and operator. I've spent my entire career in M&A, private equity, and venture capital across North America, US, Canada, Europe, and the Middle East. My work was at the intersection of real assets, capital allocation, and financial systems. At that level, you do not have the luxury of theory. You have to deal with the system as it works. This is not a news podcast. This is an interrogation of the system, how it works, where it breaks, and what follows when it does. Joining me is Shad Ahmad, economist, financial analyst, and an author who has spent over a decade analyzing global energy systems and macroeconomic dynamics. His work sits at the intersection of energy markets, monetary systems, and global macro behavior. Welcome, Shad.
Thank you for having me on the show, Jilani.
So let's start with grounding this conflict for our viewers. What is the petrodollar system, and why is it so important to American power?
Sure, no problem. So the petrodollar, quite simply, is the pricing and selling of oil in US dollars. So the practice was actually instituted in the early 1970s, I think 1971 to be specific, when the Saudis and the US came to an agreement.
Okay, I mean, I think you're going to go into the Bretton Woods, but could you start from World War II for our viewers' sake? Because I think there is a context to this, which I think is quite important to understand.
Sure. Okay, so the US dollar has effectively been the international reserve currency of the world. An international reserve currency just simply means the currency of international trade. It's the currency that is used by nations to carry out inter trade between countries. So since 1944, the dollar has had this status. The US were able to impose the system on the rest of the world by virtue of the fact that the US had a monopoly or a near monopoly on gold reserves. So back then, I think the total gold reserves in the world was around about 35,000 metric tons, of which the US owned about 20,000 metric tons of gold. So they were in an extremely dominant position.
I see.
So based on their gold reserves, they were able to issue fiat dollars and effectively...
So when you say fiat, you mean paper currency?
Paper currency,
right? Okay,
precisely. So I think the ratio is around about 1 ounce of gold was equal to $35. Right. So by virtue of the fact that the US had 20,000 metric tons, that meant there was a physical limit to the amount of paper currencies that the US Fed could actually issue.
Right. So that was in 1944, 1945, and this obviously went forward. I mean, there were many meetings and briefings, but I think the context was a Cold War with USSR, and actually USSR was winning that Cold War. Certainly from a space race perspective, because when you have nuclear bombs, you can't really use them. So it's almost like, how do you project power? So I think the first person in space was a Russian cosmonaut, and NASA was then created, and they wanted to compete, and all of that needed money, of course. And there was a conflict in Suez. For the first time, US essentially was the dominant force, clearly the dominant force for Europe. 'Cause prior to the Suez conflict, there was a view amongst Europeans that they are still a power. And I think both France and Britain had their Suez moment. So at that point, France wanted their dollars. And in fact, there was a view probably amongst a lot of European states that America is printing too many dollars. So do they really have dollars? So I think France called their bluff and said, here's your paper currency. Can we have our gold, please? So could you talk us through what happened next?
Sure. So you're absolutely right. In terms of after World War II, really what took front and center was effectively the Cold War between the US and the Soviet Union. So there was a whole host of conflicts that occurred during this period, and primarily there were proxy conflicts rather than hot wars. Obviously, we're talking about two nuclear powers that can't really get into a direct war with one another without having devastating consequences for the world. So, I think through the 50s, we saw the Korea conflict, the Vietnam conflict in the 60s, and then obviously the incident that you're talking about in 1968, the conflict between the Arabs and the Israeli state. So obviously war is an expensive business, and maintaining an empire is an extremely expensive business, as we've seen throughout history, that disproportionate amounts of resources are required to maintain an empire. The US was no different in that respect. And the way they effectively got around that was through the Bretton Woods standard. The ability to print currency at will.
So if you can just explain what you mean by the Bretton Woods standard.
So the Bretton Woods standard, as I explained before, is a dollar-backed US currency. Now, it's a gold-backed dollar currency,
right?
And the gold is meant to act as an anchor to stop the US from actually printing surplus dollars. Now, the problem with such a system is that it operates on trust, right? So the participants in the system are trusting that the dominant power is going to be responsible, and they are going to print as many dollars as they have gold in reserve to back it up. But being an empire, the temptation to print more dollars than you actually have gold in reserve to back it up is enormously tempting, especially when you have enormous amounts of expenditure. And that was, as you sort of rightly alluded to, a lot of their allies, like France, like Britain, were speculating that they were actually they were printing more dollars than they actually had gold in reserve to back it up. So because of this, they were worried that in terms of their foreign exchange reserves, the value would depreciate, which is why they wanted to redeem gold. That was a way of preserving whatever capital they had accumulated. So I think from like 1969 onwards, countries like, I think Britain was actually the first country on the list that approached the US asking for their gold back. And then France followed suit not too long after, and then Germany. So slowly there was a line of countries that were forming, demanding their gold back. And then eventually we get to 1971, where Richard Nixon, the then president, effectively shut the gold window, which was an admission that the US didn't have the necessary gold reserves.
So when you say shut the gold window, what does that mean? Well, he just said, sorry, we're not going to give you gold back.
Exactly.
Okay.
That's exactly what he did. Effectively, it was a form of default. It was a debt default.
Right.
That's the way you can view it.
Okay. So that was 1971. So what happened after that?
Okay, so after 1971, once the US delinked the dollar from gold, the US had a problem because they wanted to maintain the international reserve status of the dollar. But what gave the dollar its value under the Bretton Woods system was gold. So effectively what the dollar did was derive its value from an underlying commodity. And that was gold, because gold was, effectively the foreign exchange reserve for millennia, for thousands of years. So they needed to somehow replicate that system by utilizing an alternative commodity, right, which would ensure that there would be a perpetual demand for the dollar. So what happened in 1974? So this is 3 years after the US came off the dollar system, was that the then Secretary of State, Henry Kissinger, who was part of the Nixon administration, went to Saudi Arabia and actually cut a deal with the Saudis. And the deal was pretty simple. It was the Saudis agreed to denominate the sale of their oil and gas in US dollars. And in exchange, the US promised to provide protection to the Saudi state from any internal or external threats that they may face.
Mm-hmm.
So what that effectively did, because we exist within the industrial age, right? So the modern economy is the industrial economy, and industrial economies are contingent on energy. And so the most prominent form of energy is oil. It's the most strategically valuable energy commodity on the earth. So the thinking was that if we could tie the dollar to oil in the way that the dollar was previously tied to gold, then effectively the dollar would derive value from oil. And because there is perpetual demand for oil, therefore there'll be perpetual demand for the US dollar.
That's a great explanation. Thank you. So let's break this down for our viewers. And I'd like to make a point to our viewers, actually, which is this system is not explained in most economic courses. You can do up to a master's, and actually some of this phenomena is actually not explained very well. And part of that is intentional, because you don't really want to explain the mechanics of the system too much, I feel. So I think it's quite important that we just explain that. So how does a country essentially buy oil? What happens to that transaction, and how does the US actually benefit?
Sure. So effectively, with this maneuver, what the US did was turn the US into a gatekeeper of energy commodities, effectively. So it's important to understand that the deal that was cut between the US and the Saudis, it was actually replicated with the other Gulf energy producing countries. So we're talking about Kuwait, we're talking about Qatar, UAE. Mm-hmm. They all followed suit. They cut exactly the same deal. And also because Saudi was it was the leader of OPEC. So OPEC is the organization of petroleum exporting countries.
It's a cartel. Yeah.
It's a cartel.
Yeah.
So whatever Saudi Arabia does, the other members follow suit. Yeah. So the US was in this advantageous position where pretty much they got all oil producing countries to agree to this setup. So what that meant was that any country that wanted to access energy resources, they had to deal with the US first in order to acquire dollars. And now there was 3 or 4 mechanisms by which countries could acquire those dollars. One of them is aids and grants.
Yeah.
So that's just basically dollar handouts. The US state just giving dollars to countries.
Usually for a reason that is, they're not just handing things out, but yeah, okay.
No, that's right. Yeah. The second mechanism was borrowing the dollars. So approaching US financial institutions and effectively loaning those dollars. Mm-hmm. And the third one was earning dollars. And the way they did that was to export their commodities, their goods, their services to the US market. And in exchange, the US would give them dollars, and those dollars could then be used to purchase oil and gas. Yeah,
but the technical term for that is bilateral trade, but actually in real terms, it just means basically a barter, actually.
Yeah.
So you as a country have to go and acquire dollars in one of those means. You can just exchange your currency for a dollar at the prevailing rate, or one of the other 2 things you basically mentioned, right? So that's great. So let's say you're Japan and you've now got dollars. How do you then buy oil from Saudi? What do you do?
Okay, so obviously the modern economy is a little bit more complex than historical economy. So the US effectively established a settlement system. which is referred to as SWIFT. And all it is just the IT infrastructure that is utilized by countries to settle their transactions. So a country like Japan would have to use the SWIFT system, which is owned and controlled by the hegemon, the United States, and effectively every single transaction has to be signed off by the US. So that gives the US enormous power because they control the infrastructure that is utilized to settle transactions. So the Japanese would effectively transact with the Saudis. It'd be invoiced in dollars, and that transaction will be settled using the SWIFT.
Using the SWIFT system. Okay. So we'll come back to SWIFT in a minute. But so if we were just to simplify this for our viewers, I would say these dollars are then used to transact and buy the oil, right? Using SWIFT. So then what happens now? Because Saudi suddenly has a windfall of dollars. If it just releases those dollars into its economy, it's going to create inflation. Simply because, as any economist will tell you, if you don't increase your output by the same rate as you increase your monetary supply, you get inflation. Too much money chasing too few goods. So what does Saudi do with these dollars?
Sure. So there's a couple of ways to address the issue. One, Saudi could use the dollars to invest in their economic infrastructure. So, to your point about the money supply has to increase in line with economic output. So one way around that is to just increase your productive capacity, i.e. produce more goods and services.
But they don't do that.
But they don't do that because primarily they're a single commodity economy. It's oil and gas is what they specialize in. The alternative is recycling those petrodollars. So what the US did was set up a mechanism which would allow countries that possessed surplus dollars to recycle those dollars back into the US financial system. And what they could do, they could purchase US Treasury bills. Treasury bills are just government bonds.
Bond is
an IOU. So it's effectively it's
just government debt, basically.
It's government debt. It's lending money to the US government, which they'll pay back at a later
point in
time.
The future,
Precisely. So what the recycling does, it performs an important function because the US has to maintain the value of the dollar. If they continuously print US dollars, it depreciates the value of the dollar relative to all other currencies. So in order to maintain its attractiveness, they have to create artificial scarcity. And this is effectively what the recycling component of the mechanism does. It reuses the dollars that are already in the system, and it allows the US specifically to run budget and trade deficits.
Interesting. Okay, so it's just a massive IOU. So it sounds like America is borrowing money off these states and promising them some return, actually as low as 1.76%, by the way. In 2016, I think the bond rate was 1.76. Today it's 4.4, but we'll come back to that later. That's a clear phenomena. That's quite interesting as well. But so essentially, petrodollar recycling is the means by which America has a blank check, because whenever it needs to print money, it actually just essentially prints dollars and loans the money back, and just services that debt, which means America becomes a net importer. So if you go back to 1950s, America was a net exporter. So it was actually exporting more than it imports, which puts it in a balance of payments surplus. So it has more money coming in, basically. But now, actually, America is in deficit every year. I think something during the peak of COVID, it was $3.8 trillion, which is 3,800 billion, just for our viewers to understand, because that number is a huge number. And the UK economy is 3 trillion. The total GDP in the UK is 3 trillion, and UK is one of the top, probably the tops in the top 5 or top 6 economies in the world.
Yeah.
Is that fair to say? Top 5 or top 6? Or
The UK?
Yeah.
It has been, certainly. I think it's slowly falling down the...
but right now it's about top 5, top 6.
Yeah, something like that.
So the US deficit is bigger than one of the leading economies in the world.
Yeah. I mean, just to add to that, I think it's worth sort of making a distinction between goods and services. So you have a number which is just purely what is the trade position, what is the trade balance for goods, so tangible commodities and
things,
goods.
Things.
And services are, have their own number, and then they amalgamate those two numbers together. The reason why I make the distinction is because financial services comes under services. So from the perspective of the US, their dominant export is actually dollars, is financial services, right? So the point that you're making is that the large trade deficit is predominantly in goods. So effectively what the US is able to do, they can export dollars and they receive tangible commodities and goods.
Well, I'm just making the point because a lot of people, they're not economists, so these points are lost on them. But I think we just have to explain the petrodollar. And essentially, the petrodollar allows America to stay as the dominant economy, as the dominant power, and effectively allows America to control vast parts of the world. And so this is what the petrodollar system is. And I think I would say the recycled dollars, 65% of those at most go into treasuries. The rest of them, where do they go? So they go into sovereign wealth funds. So, Saudi has PIF and, UAE has its equivalent. I think it's a Qatari National Fund and other sovereign wealth funds. Those funds are essentially funds created by those sovereign states, and they're invested in US debt and some equity.
Yeah.
So this is different to treasury bills, which are basically bonds from the government. For instance, Saudi Arabia has a disproportionate amount of investment going into Fannie Mae and Freddie Mac. And you might say, well, those are very strange names. What do they do? They're two agencies that buy mortgages off banks. So if you think about the system, banks give out mortgages, but they they can overlend. That lending, those mortgages are effectively collateralized, and they're bought by these two agencies, which allows the banks to give out more mortgages. So you can see why suddenly real estate becomes such a dominant force of growth in every Western economy, because it's actually a real manipulation of the system. But those, then there are hedge funds, and there are companies like BlackRock and others whose job is to manage the petrodollars that come in from states. And they will basically put them into assets. So they're basically asset managers. So you can see the entire system, the entire financial system, it's dependent on this, on petrodollars. And I would say that the recycled dollars don't just get invested, they get absorbed by the system to keep it functioning.
No, I wholeheartedly agree with you. So, when the system was born in the early 70s, predominantly surplus dollars were invested into treasury bills. But since that time, effectively, they've created more and more new financial instruments for effectively these surplus dollars to flow into. I think it's also worth noting that the US isn't the only beneficiary of the system. So much of these capital flows actually end up into the financial systems of their allies. So for example, Britain, the UK, was one of the major beneficiaries of the system, because historically they had close relationships with the Gulf states. They were able to convince them to send a significant proportion of the surplus capital into the City of London. And that's the reason why, for example, the United Kingdom was able to develop the #1 financial center in the world. We often forget that actually it's London that possesses that rank, and New York is #2.
That's right.
So yeah, it's money ends up in the UK, money ends up in the European Union.
I would love to one day do a podcast on the nation state and whether the Western states have a nation state at all, because you just touched something very interesting. These financial elites, they don't have a border, and so people are sold this view that you actually belong to a nation state, but actually the financial system doesn't behave like that at all. And what you have is a nation state everywhere else, but actually in the western part of the world, there is no nation state. It's just a bunch of wealth owners that traverse through the whole system, and you see that in the Epstein files.
Yeah.
When you look at the names of people, you realize there are no borders here. But anyway, let's not go into that right now, because I think we'll open up a can of worms.
Sure.
So if I was to summarize what you've just told me in simple terms, I would say this system is simple. The world needs energy. Energy is priced in dollars, so the world needs the dollars. And that's pretty much the premise at which the US built the petrodollar system.
Yeah, absolutely. That is a nice summary.
So now we come across, we actually touch upon something else, which is the interdependency of the system. And, I watch many other podcasters and economists, and one of whom is Professor Zhang. And he says the petrodollar is just a massive Ponzi scheme. To what degree do you agree with that?
Yeah, I think that's a pretty accurate description of the system. Effectively, when a hegemon possesses the international reserve currency, what that means is effectively they don't require a domestic economy, because whatever they need, they can just print the dollars to acquire the commodities, the goods, the services that they need. This is something the Spanish Empire did, I think 200-300 years ago. What they would do is they would extract gold and silver from their colonies in Latin America, and they would just purchase the things they needed, right? And the consequence of that was that they neglected their domestic economy. So what it does, it makes the hegemon lazy. If you catch my drift. But more specifically, what the international reserve currency status allows the hegemon to do is establish this global financialized system which allows them to extract wealth from other parts of the world through mechanisms like debt, interest, monopolies, various financial instruments that they can use to do that. So this is something that I don't know if you're familiar with John Perkins, who wrote The Confessions of an Economic Hitman.
Yeah.
So his job was to represent the United States, specifically the deep state, and multilateral financial institutions like the IMF. And so what he would do, he would go to weak countries, economically weak, and get them to agree to borrow enormous amounts of dollars, right? Effectively putting those countries into a debt trap. And once he was able to put them into a debt trap, ostensibly what would end up happening is, because weaker countries, the corruption tends to be more rampant. So elements of the political elite would basically skim off the top. They would take the dollars and they would leave the population to carry the burden of the debt. Yeah. So after a period of time, when repayments have to be made, the country's not in a position to make those repayments, at which point these institutions then have the power to actually restructure the economies of these countries. And what the restructuring is designed to do is make those economies more conducive to serving the interests of Western nations like the US effectively.
I'd like to, while this is very interesting, I'd like to focus on the US economy. So what's been the impact of this petrodollar system? I mean, one of the major changes in 1981 was financialization, which you can explain to our viewers shortly. And it's had a profound impact on the economy. Could you just talk us through what happened and what we're seeing now?
Sure. So financialization simply means the dominance of the financial sector over the real economy. And in a financialized economy, in order for it to function, the currency has to be strong relative to all other currencies. So that's fundamentally the end objective. The way that you strengthen the currency is to attract capital flows from other parts of the world, right? Into the US dollar itself. Now that creates a problem for the domestic economy and domestic producers because they are left at a disadvantage when it comes to production and exporting. It's prohibitively expensive for them to produce things domestically because the US dollar is so much stronger than the other currencies in the world.
I see. Right? So therefore your cost of labor and cost of import will be too high.
A haircut it's a universal activity. Wherever you are in the world, people get the haircut, right? But to have a haircut in say the West is significantly more expensive than it is in other parts of the world. So for example, in Bangladesh, the cost of getting a haircut is 1/10 of the price of what it would be here.
It would be, of course.
Right? Yeah. So what is that down to? Right? People are going to argue, well, is it the quality of the haircut? Is that the reason why it's so much more expensive?
It's just cost of import, it's labor and cost of import.
Precisely. Yeah. It's because of the exchange rates. It's by virtue of the fact that the dollar is so much more stronger than all other currencies. It just makes any economic activity that occurs domestically that much more expensive.
Just too expensive. Okay, so that means if it becomes too expensive, you then outsource. What do you do?
Precisely. So in order to regain advantage, what US corporations had to do, and this was, in general, this is what Western corporations did, was that they offshored the manufacturing. So they effectively moved their factories away from the US and to other parts of the world like China, India, Southeast Asia, because these countries have a comparative advantage in labor. Their populations are so big, therefore the wages that they'd have to pay to the domestic workers.
And this is globalization.
This is globalization.
This is what you mean by globalization.
Absolutely.
So if we look at these two concepts together, and this is actually interesting because there is this idea that the Western economic financial system is this monolithic thing. But actually, if you go back to Adam Smith, you go back to Keynes, you go back to even Friedman and others, you will notice that it evolves constantly. It's a constant it's evolving all the time. So we had Bretton Woods 1, which is gold backed. We had Bretton Woods 2, which is petrol or oil, basically, petrodollar. And then we had in 81 financialization, which is the loading of debt, basically, on almost every single asset. Because ultimately, the financial elite want to use their money, and essentially, they will then use that money to buy up lots of companies and lots of production, and then they then own that, and that incurs a debt which has to be paid by that business. And this is pretty much the prevailing model of almost every transaction in the West. And that, alongside the fact that the dollar is more expensive, makes it very, very expensive to produce anything, which then requires you to globalize, which ironically takes all the manufacturing, all the know-how, and all the knowledge transfer outside of the economy. So what has happened, a almost unintended objective of this, is the hollowing out of pretty much the industrial base. Not just in America, but in a lot of the European countries too, like Britain, for example. And ironically, this is actually what the MAGA movement is all about. Make America Great Again is about bringing production back into America. But who took the production out? So this constant obsession with foreigners and immigrants, they're not the ones that took the production out of the country. This was the financial elite, and this is the thing that nobody is allowed to question here. So actually, I would say the impact on the economy, both in America, in Britain, and some of the other European countries, is that it's actually hollowed them all out. And the knowledge transfer has gone to the East. Yeah. And we're now seeing the impact of that now.
No, I wholeheartedly agree with you. And I think it's quite telling that, the level of dishonesty that with the rise of the MAGA movement, that the leaders of the movement were never truly openly honest with the people.
That's right.
That the cause of deindustrialization, it wasn't the fault of China, it wasn't the fault of India, it was the fault of your own financial elite. They were the ones that ultimately created the environment which necessitated the manufacturing had to move abroad. There was no other way of getting around it. Otherwise, American corporations, Western corporations couldn't survive. So now what they've done is they've flipped the issue on the head. It's the US that has been cheated. It's the US that has been effectively badly done by with this globalized, financialized model. When in reality, that the model just doesn't suit the US elite anymore, or the Western financial elite anymore, and that's why they need to adapt it.
I think J.D. Vance pretty much admitted that in a speech. He said the globalization was one of the worst things that could have happened to the US economy. He pretty much alludes to that fact. But I want to move on to Iran, because we're obviously looking at this conflict. How does Iran's action begin to put pressure on the system? Are we looking at a really structural threat, or is this overplayed?
Sure. So to be able to make sense of Iran's actions, so how they're actually fighting this war, we need to really understand the backdrop. So this is where actually we're going to need some stats to understand the situation that the world is in at the moment. So one of the consequences of financial...
I've never met an economist who doesn't like stats.
It comes with the territory. It comes with the territory. We are obsessed with statistics. So one of the consequences of financialization, as you sort of previously alluded to, is that countries end up accumulating vast quantities of debt. So at the moment, the global debt is approaching $350 trillion. Huge.
Okay, you're going to have to contextualize that number.
Okay, so
that's a big number.
So $1 million is 1 and 6 zeros. $1 billion is 1 and 9 zeros. $1 trillion is 1 and 12 zeros, and effectively 350 of
but if we so if we put it into something we can understand.
Sure. So effectively, if the world population is 8 billion, that means every single person in this world right now owes $50,000 each.
But someone could argue, so what? If you can service that there, what's the problem?
So the issue is, for the system to function, debt level has to actually rise in line with production. So this goes back to the point that we were talking about a little bit earlier. So if production doesn't increase, then the debt that is being accumulated is just going to simply lead to price inflation. That's going to be the consequence of it. So in order to maintain prices, production levels has to increase. Now the problem with the system, because it's debt based,
but what has that got to do with Iran? What I mean?
So I'm going to come to that.
Okay.
So because the system is debt based and it's interest based, what that means is debt can only ever go in one direction, which is up, because of compounding interest. And because debt can only ever go up, that means economic production also has to go up in line with it. Now, the risk to the system is if there are any disruptions in energy flows, in economic production, in capital flows, that poses an existential risk to the system.
Right.
So that's the link.
I see.
So if Iran, which is what it's trying to do at the moment, by securing control of the Strait of Hormuz. Now, the Strait of Hormuz is just simply a 20-mile stretch of water, which falls within its international territorial waters, right? Iranian territorial waters, and sort of on a daily, yearly basis, effectively 20% of the world's oil flows through that strait. Not just oil, natural gas, fertilizer, a whole host of commodities. End up flowing through that strait. So Iran, by exercising complete control, they're able to disrupt energy flows, commodity flows, and capital flows, which poses a risk to the financialized system that the US is operating.
I see. So is it fair to say if Iran blocks the supply of oil and other goods, the dollar cannot be recycled? That's the first thing that you'd have to realize, because all those dollars cannot come back to the US economy. So suddenly the US deficit this year, which is likely to be around 1.8 trillion, Again, just for context, 1.8 trillion is 2/3 of the UK's absolute production in any given year. So that's a huge amount to go into deficit. And so the first problem is obviously no recycling if this goes on for a long time. And the second thing you're saying is essentially a massive hike in prices, because obviously all this debt needs to be serviced and there's no way to service that debt. So everything would just go up in price, basically.
Yeah, no, absolutely. And the other issue is it increases the stress on the financial system. So there was an article published in The Economist, I think it was in February 2023, so 2 years ago. And it was effectively about the interest burden of the world. So something like the total interest payments on global debt is around about $13.5 trillion. So that amounts to around about, back then, 14 to 15% of the total GDP of the world just went on the servicing of debt. So now what Iran's actions is going to do is, because, as I mentioned, debt can only ever go up, but GDP can go down.
So GDP is what the country produces every year.
Precisely. Yeah. So it's the economic output of a country, which translates into income, effectively.
In theory, yeah.
So what Iran's action is actually going to do, by denying the world 20% of the energy, oil, that means that economic production is going to drop, which means that income is going to drop.
Well, I think it's
means the financial pressure on the system is going to increase.
I think it's worth pointing out, because people sometimes get misled with numbers. 20% drop in supply will mean a much bigger percentage drop for everybody else, because energy is used for everything. So it's not just a 20% drop. Okay, so that's supply. It looks to me like there's also Iran is also attacking production as well. So we can see Kuwait's refineries being attacked, Bahrain being attacked, Qatar's LNG has been attacked, although, to be fair, Iran said that wasn't Iran, that was actually Israel. So we don't know who actually did that. But anyway, the net effect is Qatar's LNG is completely destroyed, and it won't be up for another 6 to 9 months.
Yeah, so I think from what I can remember, it's around about 20% of its LNG facilities.
Also 20%, not all of it. Okay, fine. So actually, and also the other thing to bear in mind is you can only store so many oil. So if you think about, if a country is exporting 1 million barrels a day, how many days are we talking about now? It's probably 30 days. So where would you put 30 million barrels of oil? So if this oil is not being shipped, production has to stop, because you cannot store this anywhere. And on top of that, some major production areas are being bombed. So not only is supply being bombed, production is being bombed. So not only supply being choked, production is being bombed. Let me be precise. And I think number 3 is the attacking of US bases is not just, I mean, there's obviously many objectives for this, and some of this we can't go into here because this is a economics podcast. But economically, Iran is basically asking the question, if the deal was petrodollar recycling for security guarantees, who's guaranteeing your security? And actually, this is a big question for all Gulf countries, and I think they're actually asking that question. Saudi's asking that question, Qatar's asking that question of the US, saying, well, you are meant to protect us, and you can't protect us. So by doing that, Iran is questioning the entire fundamental basis of this agreement.
No, wholeheartedly, and I think there's sort of news coming out that actually many of the Gulf states are reviewing their investments within the US, partly because obviously the global economy is ground to a halt, and so therefore they're going to have to dip into their savings, but also in terms of they're going to have to think long term of what kind of arrangements that they can make with regards to security, because obviously at the moment it's not fit for purpose, the agreement that they have with the US. So no, I wholeheartedly agree with you. It was a very shrewd move from the perspective of the Iranians, because effectively what they're demonstrating to their Gulf neighbors is that, you know, this relationship has been one way. That what you have done is you have played a critical role in maintaining the dominance of the US globally, but
at what cost?
But at what cost?
So that's interesting you say that. So you don't see this as an act of aggression from Iran. you said they played it very smart. What do you mean?
So I think it's important to understand that the Iran is fighting an existential war, right? So they see this attack as an existential threat upon themselves. This is literally a matter of life and death for the Iranian state. So right from the off, and even before the conflict actually began, they had already warned the US and Israel and the Gulf states that should they be attacked again, that they would not only attack Israel, but they would attack US military assets, US economic assets, and they would ultimately, the nuclear option is wiping out the entire energy production facility of
I guess my question is,
Gulf.
I guess I'm going to assume the viewers are following the news. So I'm going to ask you something which is slightly underneath the news, which is, are you suggesting these aren't acts of aggression? These are actually actions that were necessary for Iran to make these, to actually demonstrate the weakness of the system, rather than just an attack on a sovereign state?
Yes. So effectively what the Iranians are doing is they have escalation dominance. So what the message that the Iranians are sending to the US and Israel is that if you escalate this conflict,
we will escalate.
Then we'll escalate this conflict.
Interesting.
So from the perspective of the US and Israel, they want to collapse the state. And they intend to do that by going after the critical infrastructure of the state. So that's production facilities, that's weapons facilities. And so the Iranians are responding in kind. So although they cannot hit the US directly because of the distance, what they can do is deal a massive blow to the petrodollar system, which is why they threatened the energy facilities of the Gulf states.
Why did Iran attack AI centers? Why did it attack Microsoft infrastructure?
So I would say for two reasons. The first is that the AI sector is pretty much underpinning the entire US economy right now. So some studies have been done, or some people have done some analysis in that, and came to the conclusion that actually it's AI investment that is driving US economic growth right now. So if you strip that out of their GDP numbers, then essentially the US economy is standing still right now. So it would significantly damage the US economy. And the second is that similar to the space race and the arms race during the Cold War, this is seen as the new frontier in terms of sort of technology and weaponry, effectively. So I think it was revealed in the news that the US have actually incorporated AI technology in many of their weapons systems.
But I would add something else, which is, so if we go back to the petrodollar system, as we said already, 65% is essentially recycled into treasuries, into government debt. Most of that as a reserve, as a currency reserve, and there's other bonds. But I think, where does the other 35% go? And what we are witnessing is a massive investment from asset managers like BlackRock to hedge funds, private equity firms, all vying for AI capital. And this is creating a bubble, because basically a bubble is a increasing amount of money chasing a finite number of things. I use the word things loosely. Could be service, could be a product. So that's why you get a real estate bubble, because lots of money chasing after very few real estate, or you get an IT boom, or you get any time you are chasing after a small amount of things. And so this AI bubble was essentially being created. And what do you need for AI? Well, you need energy, funnily enough. You need data and algorithms, and you need chips. You need basically GPUs and CPUs. And GPUs and CPUs need rare earth minerals, which funnily enough are found in that region as well as in China and other places.
That's right.
So actually this AI bubble cannot work unless it is invested in that region. Elon Musk is thinking about going out of space because there isn't enough energy in the US to run the AI boom. So you can see all this petrodollar is being recycled to create this AI boom, and Iran very shrewdly, I would say, destroy those centers to effectively put more pressure on the petrodollar, because you can't recycle it here, basically.
Yeah, no, absolutely, and I think you're spot on with your assessment about the AI sector being in a bubble. So think about how much money would have been invested in actually constructing those AI data centers in the GCC. So that's an industry that's already in a bubble, and they've just incurred massive losses because the infrastructure that they've built has been wiped out. So whatever way you look at it is going to hurt the US.
Just a word to our viewers, we are going to do a podcast on AI shortly. This will be within the next 2 months. So this is obviously an area of interest for us. But if we now move on to the next question, which is what is Iran looking for? And is it acting alone?
Yeah. So in terms of the immediate demands that Iran has made to the United States and Israel, I think it's around about 4 or 5 points. Mm-hmm. So the first one is an immediate cessation of hostilities, effectively to bring an end to the conflict as soon as possible. The second is for the US to remove its military and economic assets from the region.
Sorry, if you don't mind, let's just explore that. Is it in Iran's interest for this to stop? Because isn't this a war of attrition? The longer the longer this war goes on, the stronger Iran becomes.
So it depends on how much they really want to hurt the US and the US empire. Effectively, the points that the Iranians are providing to the Americans, they're maximalist demands, right? Meaning that these are the points that the US has to agree to in order for Iran to agree to a ceasefire. Right? So obviously we know that it's Donald Trump and the Trump administration that is primarily pushing for a ceasefire. So Iran are listing out...
Are you confident of that position? That it's actually the US pushing it more than the Iranis?
From what we can gather, based on the information that is being leaked by the Trump administration, or elements within the Trump administration that which kind of suggests that it is Donald Trump that's looking to end the conflict as soon as possible. So Iran has responded by setting a set of maximalist demands. Effectively. If the US doesn't agree to those conditions, then the Iranians obviously are happy for this conflict to continue and to turn it into a war of attrition, because ultimately that also helps to achieve their aims as well.
Sure. But I think Iran prior to this, prior to February the 28th or 27th, Iran was trading oil at around about $48 a barrel because it had to apply a discount given the sanctions. It was producing around 1.1 million barrels a day. So in my estimation, it was making around $20 billion from oil exports. Today, it's selling 1.5 million more oil at $115 a barrel. So it's tripled the amount of money it's making. It's making 75 billion roughly from 20 billion before. So I guess what I'm trying to say is Iran is actually doing quite well out of this.
They are doing well out of this without a shadow of a doubt.
So why would they want this to end?
Because war obviously costs money as well. That's the thing. So it's not just simply that they're generating revenue. The Russians are in a similar position. So they're benefiting from exploding oil and gas prices. But you still have to pay for a war. And the longer the war goes on, the more money that is drained from the state coffers. So ideally, Iran is able to end the conflict on their terms, which is why they've set these demands. And if the US are unwilling to meet those demands, then the Iranians are happy for the conflict to continue because they're in control at the moment.
I mean, one of the very interesting paradigms here is before the start of this conflict, before February the 27th, both Russian oil and Iranian oil were sanctioned. But the US, to provide effectively to create liquidity in their own system, they've actually unsanctioned Iran and Russia. which is, so actually they've just shot themselves in the foot in a very big way.
Yeah.
Yeah,
no, absolutely. I mean, it kind of demonstrates the point that this whole thing was not thought through properly.
Well, it was thought through by some people, just not.
just not
Donald Trump.
Just not Donald Trump. Yeah.
So the other thing is, I mean, if you think about it from Iran's point of view, they probably want to remove sanctions because that's been one of the biggest problems. You know, the US has a habit of using sanctions to destabilize countries, and has done so for decades. So, you know, Iran needs to come out of sanctions. I think. Sorry.
So sanctions is one of the things that is on the list. The other thing is reparations. So they're demanding reparations for the damage that the US and Israel has caused, and obviously that's a real big sticking point because it's going to effectively impact on US pride and arrogance. You know, they've never ever had to pay reparations before.
Yeah.
The other thing is that the US has to accept Iran's dominance of the Strait of Hormuz because Iran plans on effectively setting up a toll booth.
Yes, that's right.
You know, and charging for the oil that passes through the straits. So all of these, as I mentioned, these are very maximalist demands, which will be ordinarily would be very difficult for the hegemon to accept because one, it's an indication that they've lost the war, and two, that their power is waning. Particularly the point about the toll booth, and sorry, that the fifth was payment in other than US dollars as well. So one of the things that they're doing at the moment, so despite the claims by the US and the West that the Iranians have shut the Strait of Hormuz, they haven't actually shut it.
That's right.
What they've done is it's open to selective countries effectively, i.e. those countries that are on friendly terms with Iran will have free access to the strait. Those that are willing to distance themselves from the US and Israel can access the strait provided they utilize Chinese yuan and pay a fee to the Iranians. So it goes back to the point that I was making, that essentially what the Iranians are trying to do with this conflict is forcibly breaking inertia of the petrodollar system. So they are deliberately trying to force countries to change their economic and financial behavior. And in doing so, that basically strengthens the Iranians, the Russians, and the Chinese. So this goes to your point. Are the Iranians doing it on their own? No, they're doing it with assistance from the Russians and the Chinese.
Yeah, you can see just the intelligence they've got on US movements, bases where soldiers are. This is not something that they possessed even 9 months ago. They've clearly been supported by Russia. And Russia is not denying it, to be honest with you. Russia is quite open about it. And even the Chinese are not really denying it either. So in terms of intelligence, you know, it's shared. In terms of deterrence, it's shared. In terms of radar and other technologies, is also shared. And obviously the missiles, Iran pretty much has its own missiles. So the combination is quite strong. But I think for me, there's a few things to consider here. So I think for the Americans, this has gone as bad as it could go.
Absolutely.
For a few reasons. One is, as I said before, where countries were sanctioned by America to try and weaken them, they've been unsanctioned, which actually flies against US policy generally. So that's not good. That means that actually they've had to unwind their policy. Secondly, Iran is no longer accepting a discussion about nuclear. So essentially, if you look at it from Iran's point of view, why would it give up nuclear ambition now? The person that was holding them back, or when I say holding them back, but was constraining them, was actually the former late Ayatollah Khamenei, who that was his religious position, that weapons of mass destruction are not allowed Islamically. So the new leadership has a different position. So suddenly Iran may pursue, if it hasn't already, a nuclear bomb, a nuclear deterrent. And that will obviously mean other countries in the region, like Saudi, for instance, will also need a nuclear deterrent. And in many ways, that may actually calm tensions in that region down. The removal of US bases will effectively put a long arm between America and the Middle East, and will require a new security guarantee, which may or may not come from Iran, but it certainly won't be coming from the US. As you said, a new Petro-Yuan system, and removal of sanctions. So those are the main things I think America will have to accede to. And I think, just to put some color to your point, I think those are the main things it seems to me that Iran is looking for.
No, I agree with you wholeheartedly. And I think from Iran's perspective, with the US taking the decision to attack Iran, effectively what they've done is they've limited themselves to a section of the decision tree where there are no good outcomes for them. So
what do we call that in economic theory?
Game theory.
Game theory.
Game
right,
theory. Yeah. So they've limited themselves to a part of the board where just literally there isn't any good outcome. So if, for example, if the US accedes to Iran's demands, effectively that will be the end of the petrodollar, but it will take a little bit more time. Right? So it's you're talking about the world will slowly shift away from the petrodollar system, but it may take a few years.
Some time, yeah.
It will take some time. So it's effectively death by 1,000 cuts. If they choose to remain in the conflict, then there's two options. If the US escalates the conflict, then as we discussed earlier, then Iran will also respond in kind and escalate the conflict.
Escalation ladder, basically. Yeah.
Absolutely. And they have escalation dominance because they have gone on record as saying that if, for example, the US and Israel escalate to the point that they try to collapse the state by targeting all of the key infrastructure of Iran, then the Iranians are going to destroy the energy facilities in the entirety of the Middle East, which will end the petrodollar, right? If the Americans choose not to escalate and simply fight the conflict at the current level, then that favors Iran because then it turns it into a war of attrition. And the Americans are in a race against time because the longer this conflict goes on, the more stress is going to be put on the world financial system and the global economy. So from the perspective of the US, there is no good outcome for them.
And what do we do in game theory, Shad? When there are no good outcomes, you're meant to look out for your own interests. That's the whole point of game theory, right? Yeah. Don't ever look out for anyone else's interest. Look out for your own. It's a flawed theory, but the point is, what does US interest look like? I think we have a case of the madness of King Trump, because I think according to him, US is winning every day, even though it's not. So that's interesting. So now let's move on to the Fed. So, central bankers are looking at this. Federal Reserve in the US, Bank of England in the UK, and so on. What options do they have? This is a supply-driven shock, as we will call it in economic terms. Maybe you can explain what that means for our viewers, and then discuss what options that they have at their disposal.
Sure. So, a supply-driven shock simply means that the economic instability that we're seeing in the world right now, whether that be rising prices and slowing growth, is predominantly due to a fall in supply of commodities, whether that be energy commodities and goods and services that obviously are contingent on energy flows around the world. So prices are effectively going up because of collapsing supply. Now, from the perspective of the Fed, they only possess control over monetary policy, right? So monetary policy means being able to manipulate interest rates. They can increase interest rates.
Or increase supply of money.
Or effectively. They can increase the supply of money or they can reduce the supply of money. So that's all they can really do. But the issue is that the phenomena that we're experiencing now isn't linked to, it's not a monetary phenomena. It's a supply phenomena. So from their perspective, I would really liken it to another crisis that the world experienced a few years back. So if you remember with the pandemic,
COVID, yeah,
it was comparable because Western countries like the US and the UK and the European countries, they took the decision to effectively shut down their economies. So shutting down the economies are the equivalent of falling, economic output and income. So in that situation, what did the Fed do? They printed money. And the reason they printed money was they had to ensure there was enough liquidity in the system to make sure that debt could be serviced.
Yeah.
So that is what is in their power.
Yeah.
They can ensure there's enough liquidity in the system to ensure that effectively the public sector, that governments, corporations, and households don't go into bankruptcy. The flip side of that is that you have to print a lot of money. So during the pandemic, I think the M2 money supply was around about $15 trillion.
M2?
M2. So M2, you've got 4 different measures of money supply. M0 is the most basic form of money, which is basically notes and coins, cash. It's central bank, US Fed reserves. M1 is M0 plus bank deposits. So it's the deposits that you and I will have in a commercial bank. And then you have M3, M4, which are includes things like long-term savings, et cetera, et cetera. So the M2 money supply, so we're talking about M0 and M1, which is short-term deposits and some long-term deposits.
Plus all coins and notes in circulation.
Yeah, exactly. So the money supply was $15 trillion, right? After the pandemic, they increased it by, I think it was 5 to 6 trillion. So it went to, I think, around about 21 trillion. 21 trillion, right?
Yeah.
And all of that was purely to ensure that the financial system remained solvent.
Yeah.
So effectively, that's really the only policy option that they have.
This is fascinating. And I think, again, a future show we may do is how Britain became so poor, which is going to look into some of these phenomena, actually, printing money, quantitative easing and so on. But let's look at some more prosaic factors. So let's look at bond prices. So US debt, as recently as 2016, the interest on bonds, on US bonds, treasuries, was about 1.17%, which was about, on my calculation, about $500 billion the US had to pay to service the debt every year. Since that time, the debt has increased. So I think we're now just shy of 40 trillion, which is about 33 times the size of the total UK GDP. That's the current debt the US has. So every year they have this shutdown of US services and say, we're going to shut everything down until they vote to increase the debt ceiling. Essentially, this is what this is about. So currently, the interest rate just before the conflict last year was about 3.88% on bonds. Now it's about 4.4%. To put some color to it in terms of numbers, that's about 1.2 trillion in debt servicing. So it's gone up from 600, it's almost doubled. Is it almost doubled? It's actually doubled. From 2016 to now, America has doubled the amount it pays to service the debt, not to pay off, just to service the debt. Now, if this goes up to 5%, because bear in mind, if suddenly you're choked and you can't show confidence that your dollars are going to get recycled, then effectively treasury borrowers are going to say, well, increase the rate then because it's too risky. And it can easily go to 5 to 5.5%, at which point we're looking at 2.2 trillion a year just to service the debt. And the debt goes up by about 2 trillion a year as well. So to put some numbers on this, you're looking at between 2.2 to 2.5 trillion a year. Bear in mind, the German economy is 3 trillion.
No, it's crazy. And it's even more ridiculous when you realize that the US government, the federal government, only actually brings in around about $5 trillion in tax receipts.
Tax receipts, yeah.
So it's almost half the tax receipts is going on servicing the debt.
So this, I mean, the maths is not mathsing, as the saying goes. This is going to be a big problem. So I think we can say, the problem with the supply side shock is you can't control it. No. Demand side shocks, you can stimulate demand by putting money in the system or whatever. You can print dollars, but you can't print oil.
No.
And that's the problem.
Exactly. So it goes back to the point about central banks can only really influence monetary policy. It's they can only manipulate the money supply. And as you said, you can use the money supply to manipulate demand. You can depress demand or you can increase demand, but you can't increase or reduce supply through the money supply when you're dealing with a supply shock.
So I just want to come back to you on something you said earlier about the Petro-Yuan system. So one of the interesting things, which I think alternative systems, and I just want to explain something to our viewers, and then I'm hoping you can explain to us what the alternative system looks like. But essentially, the current system in the Strait of Hormuz, I think you've kind of highlighted it. But if we go into a lot more detail, what the IRGC is basically saying is we will stratify everyone that wants to pass through the Strait of Hormuz. And if you are an ally, we will not charge you. So again, this notion that the Strait of Hormuz are blocked, they're not blocked. They're open to many countries, just not to the US and some of its allies. So China, Russia can happily at no cost move their ships. Then you have countries which have to pay something to get oil, and so they pay up to $2 million a time, which, on my estimation, will generate around $800 billion for Iran. Just bear in mind, Iran's GDP currently is about $500 billion.
Yeah.
So just this toll booth on the Straits of Hormuz is going to give 130% more than it currently produces totally.
Yeah.
And again, to put it into context, Israel's GDP in 2022 was about 550 billion.
Yeah.
So Iran, just by this alone, will generate, just this 800 billion will generate more than Israel generates. And Israel is a subsidized economy from the US. So this is huge.
Yeah.
And how it works is like this. When a ship wants to pass, they have to essentially let the IRGC know who they are. The ship is then, they do their own AML, KYC, which is Know Your Client, and they actually look up this ship and they check that this ship is not allied to any hostile country. So Israel, USA, or frankly anybody else, Germany perhaps. And if it passes that test, then the ship's leadership team have to provide all of their personal details, okay, which are then verified by this system. So you mentioned SWIFT. They have another system called, I think it's called SIPS.
SIPS. That's
and
right.
This system is verifying that these people are not allied. So not just all the commanders and all the captains and vice captains. And if they all pass, they can pay. And the currency they have to pay at the moment is a Petro-Yuan crypto. It's a stable coin which has just been created for this purpose. Some would think that someone had planned this a long time ago.
Very much seems as though that's the case. Yeah.
So we are witnessing essentially the birth of a new world order. And this is the point I think people may not realize. What you're witnessing here is something that has clearly been choreographed.
Yeah.
They're actually, the way the payment system has been set up already, they could not have set this up this quickly. And this Petro-Yuan is now the currency of choice. And I don't think Iran's ever going to go back to the petrodollar ever again beyond this.
Yeah, no, I agree wholeheartedly. And there's no reason for them to. I mean, just sort of adding to the points that you've made. So you mentioned that Iran, I think, prior to the start of the conflict, they were producing around about 1 million barrels a day, and then now it's been ramped up to 1.5. I think around about 10 years ago, they were producing around about 3 to 4 million barrels a day.
Wow.
And actually, the potential capacity, because Iran actually possesses one of the largest oil reserves in the world to match Saudi Arabia.
It does, yeah.
So really, the productive capacity should be far more than 1.5 million, right? It should be approaching 10 million. Venezuela is in the same boat. So the reason why they're in this situation is effectively because of 47 years of crippling sanctions that the US has imposed on them, which ensured that they weren't able to invest in their infrastructure. And that's the reason why the energy infrastructure in particular has been degrading over time, and the amount of oil that they've been able to extract is also diminishing. So from the perspective of Iran, they want to free themselves from these shackles. This is the reason why, one of the main demands is that all sanctions have to be moved, so that one, they can generate the necessary capital to rebuild the country, but also to increase their productive capacity, and not only to become a dominant actor in the region politically and militarily, but also economically, which, given the resources they possess, both in terms of natural and human, they should be far higher up the ranking.
So what is the alternative? So I guess there's BRICS. Is BRICS an alternative in your mind? And if so, could you just talk us through how that works?
Yeah, sure. So it's worth bearing in mind that part of the reason why the US were confident that realistically there was no challenges to their hegemony was because there was no alternative. And that alternative ultimately comes down to no alternative financial architecture. So they owned and controlled SWIFT, and no other countries had developed an alternative platform. So over the last 10, 15 years, particularly after the 2007-8 financial crisis, the Chinese have, along with the Russians, have developed alternative financial architecture to rival effectively the US. But like any architecture, you need people to willingly use. You've got to encourage countries to use your architecture. So it goes back to the point I was making, that ultimately what was keeping countries on the petrodollar system at the currently is inertia. It's just laziness effectively. This is how it's been done for 50 odd years, and by and large countries don't like change. So Russia and China effectively are using not just the Iran conflict, but also the Ukraine conflict. Also the instability that's happening in Latin America with Venezuela, to encourage countries to effectively switch over to a new system.
Right.
Why? Because the US is becoming more unreliable as time passes.
Yep.
So you mentioned that the yields on US Treasury bonds have been declining. So, over the last 7-8 years, the question is why? Why has yields been increasing? Increasing. Sorry. Yeah. Let me make that correction. The reason they've been increasing is because the US is becoming more unpredictable, more untrustworthy, and therefore countries are not willing to lend them money as they were before.
Or low risk. Yeah.
So, for example, their treatment of Russia with the Ukraine conflict, by virtue of the fact that they confiscated all of Russia's dollar reserves,
breaks the trust. Yeah.
Breaks the trust. What they're doing, what they did with Venezuela, they were engaging in piracy on the oceans and the seas. They were confiscating Venezuela's oil and gas from the ocean. So these things don't help to build trust. Yep. They diminish trust.
Yep.
And because of that reason, countries are going to look.
Well, I think the whole tariff war probably hasn't helped. I mean,
exactly.
Yeah, the whole tariff war. So, but again, I think I'd like you to explain the BRICS system. I mean, this is all great context, but for our viewers, what is the BRICS system? How does it work? Is it comparable to petrodollar?
Sure. So the BRICS are proposing to launch an alternative reserve currency, which they refer to, which they call the unit, simply the unit. And what the unit is, it isn't a single currency per se. It's a basket of currencies. So the idea is that the unit itself is going to be backed by 40% gold, and the other 60% is going to be a basket of member currencies. and those member currencies also will be backed by something, some commodities as well. It could be gold, it could be silver, whatever rare earth minerals. If that's, whatever natural resources are indigenous to a particular state will most likely back the national currency. So effectively, what they are proposing is to move the world off a purely fiat standard, which is what the dollar is, even though it derives its value from oil, and to a more commodity-backed currency. This is actually something that the Russians in particular have been calling for, I think, for whatever a decade. They wrote many papers on this issue that it just didn't make sense for, particularly countries that are natural resource rich to be utilizing the fiat currency of the US when, they can launch an alternative which is backed by their currencies, which will be more favorable to them.
I guess one of the things about the BRICS unit is China has agreed and will always demonstrate where its 40% gold reserves are. So its vaults are open, which is a very different approach to the US, who effectively, there's no guarantee that your currency has any backing at all. And I think that's what helps the transparency. And I think also some of the changes that have been made by Basel recently, so the regulatory framework is that gold can be treated as cash or cash-like, which is a big change to how gold was treated before, which is a technical point. But what it means is the classification of gold is more liquid than it used to be, and that's a huge thing. So this alternative system exists and can be utilized, basically, which is what Iran is doing at the moment with its Petro-Yuan toll booth in the Hormuz. So I guess this brings me to the final question. It's been a great conversation. What's the end game? What's the end game here for all sides?
Sure. So from the perspective of Israel, given that they were the ones that initiated this conflict, I think from their perspective, they want the conflict to continue. Not only do they want it to continue, they want it to expand to engulf the entire region, because from their perspective, they're really working towards establishing their goal of Greater Israel, which essentially is an expansionist expansionist policy. So really, they want their neighbors to be in a bad position politically, economically, militarily, so that it's easier for them to expand into the surrounding territories. So, they don't want to bring an end to the conflict. From the position of Iran, they want the chains to be removed, the chains that have been keeping them constrained for the last 50 years. And that goes back to the point that I made about their maximalist demands that they've made to the US. And they're willing to make that happen in whatever way is necessary, whether that's through peace negotiations, whether that's through escalation, whether that's through a war of attrition. They're happy for this conflict to go on if it helps them to achieve their objective, which is peace, security, and really fully realizing their potential as a state in that region, because they should be the dominant player in that region, given the natural resources and the human capital that they have available. And finally, the US, who really is in the most vulnerable position of all the actors, because they involve themselves in a conflict that doesn't serve their interests in any way whatsoever. Primarily they're fighting it because they were dragged into it by Israel. And obviously, I think we mentioned earlier on that, people within the Trump administration have come out and said that it wasn't part of the US plan to go to war with Iran. But now they're locked into this course of action and they're desperately trying to find an off-ramp. Because the end result for them is the destruction of the petrodollar system. I think some people might find that position hard to understand, because US is and has been in the 90s it was the hyperpower. It's certainly now a superpower in a bipolar world. So you actually maintain that the US will retreat? I think irrespective of whether or not they retreat of their own volition,
Right.
or they are forced into retreating because they suffer an absolute defeat at the hands of Israel. At the hands of Iran. So there's talk of Trump sending in troops on the ground.
Yeah.
So if we see the scenario whereby they decide to send in a couple of 100,000 US troops into Iran in a last bid attempt to save the petrodollar system.
I think they're talking 10,000, not
100,000. For this particular mission, they're talking about 10,000. But the issue is that if they don't achieve their objective, then they are going to be forced into escalating and sending more troops in the ground. So I'm sort of talking about a little bit more.
You mean further down the line?
Further down the line.
Yeah.
So, as I said, from the perspective of the US, they're in a very vulnerable situation, very much analogous to the position that the British Empire was in with the 1956 Suez crisis. So it's almost identical. British intervention in the Suez crisis was a last-ditch attempt by the British to save their empire, and specifically the British pound.
The very, very famous Suez moment.
Exactly.
Yeah. So look, it sounds like what you're saying, and I don't want to put words in your mouth, but if I just summarize, it looks like potentially two blocks could form. You have the Greater Israel bloc, which is what we are seeing as Israel now. Israel seems to be intent on capturing southern Lebanon, and it seems to have quite. It's already captured land beyond the Golan Heights in Syria and right up to Damascus. So what you could have is basically Israel, southern Lebanon, parts of Syria, and UAE as one block. It looks like you have another block forming, which is Iran. Obviously, Iraq. The US have actually retreated all their bases in Iraq except Erbil. So it looks like most of Iraq is now under some control of Iran. Bahrain, which has something as high as a 90% Shia population, very much allied to Iran, and Kuwait, which is it's a state no larger than East London. It's a small place, right on the border of Iraq. So you could see a block forming of those plus Yemen, which is already openly allied to Iran. Qatar has released statements effectively in not so much endorsing the Iranian position, but definitely changes tone, and it looks like it doesn't want to be involved in the conflict. Yeah. So you have a new bloc forming there. It leaves Saudi as a kingmaker, actually, because it's in neither bloc. And I think the Saudis, who are also underwriting the petrodollar system, I think they need to think very long and hard about what they do over the coming period. And in fact, one of the podcasts we're about to release will be the Saudi position, actually, what Saudi Arabia should do given where it is now. The other point, I think, so that's two blocks forming. I think petrodollar, definitely an alternative system is being created right now. Nuclear capabilities, I think any state in that region now where US cannot enforce sanctions will strongly think about a nuclear as a deterrent. And finally, a new security guarantee in the Middle East, because currently the US cannot, it seems anyway, the US cannot guarantee the security of the Middle East right now.
Yeah. Now, I wholeheartedly agree with your summation of what we can expect going forward. And I think it's worth bearing in mind that with the petrodollar system, the US made themselves the center of the global economy. And eventually, when the petrodollar system dies, that the center of the global economy will be that region itself. And so it should be, because it's so strategically important to the rest of the world. You're talking about 60% of the world's oil reserves reside in that region. Large natural gas reserves. You're talking about immense amounts of fertilizer are produced because you need natural gas to produce fertilizer. Things like sulfur and helium. Helium is necessary for the production of semiconductors. So despite China, for example, having a 90% monopoly, I think they control about 90% of rare earth production. But they can't do that without helium.
That's right.
Right? So the point that I'm making is that essentially the politics of that region going forward, especially without a a guarantor for security, which is the role that the US has played over the last 50 years, is going to have significant ramifications for the world going forward. So, whoever is able to exert their influence going forward, whether that's Israel, whether that's, Iran, or maybe even a country like Turkey, is going to determine really the direction of travel for the rest of the world.
Thank you, Shad. This has been a truly fascinating podcast, actually. So my closing thoughts on this is, if we step back, what this really highlights to me is something much deeper than missiles and conflict. I think it's about the financial, or it's about the underpinning of the entire financial system that's been governing the world. The real question to really think about isn't really about missiles. It's not even about bases or war. We are witnessing a new world order in real time.